Hey there, guys. I quickly wanted to go over my Robinhood account here, give you some updates and where we're at. Real quick, I had $763 in dividends in June, and that's on both accounts, both my Robinhood and my Charles Schwab. So 763. It's pretty healthy. Monthly dividends, I'd like to get it up to 1,000 a month on average, and I have a ways to go to get there. I think right now it's right around. Added all my dividends up, projectedly it's around 9,000, so I have about another 25% to go to get there. I'd like to be able to actually get to a minimum of 1,000, so that's going to be a ways away. There's always those months that's kind of the off month, so that might take a while. I'd probably have to have probably close to double what my dividends are now just to get that low month up there. So real quick, I'm doing a lot of cover call options on my stock positions. I want to quickly go over something I'm kind of doing. It's kind of new to me and what I'm doing. So basically, I sold a 2-week cover call on a PAA, which is a pipeline company. Let's pull it up real fast here. Plains All American. It's down from when I bought it. I paid $9.22. On average. I have 200 shares, and it's down probably close to let's see, close to 70 cents per share. So it's down quite a bit. So this expires. It's over the weekend, and this expires on Friday of next week. So what I'm looking to do is I'm looking to trade this option. Right now it's only worth a penny because it fell so far, the stock fell so far, so I'd have to wait another end of the week to be able to run another cover call next week. So I'm looking at the July 10th here, and what I'm going to do is I'm going to buy that back at 1 cent. It's probably going to actually cost me 2, and then I'm going to sell the $9 covered call, so it's going to get closer to the money, but I'm able to collect an extra premium off of it rather than just sitting there and letting it expire. You can see that the chance of hitting the 950 is 90% chance of not hitting it. So I'm going to drop it down to the $9 and collect an extra premium on that. And there's actually terminologies for that. I just forgot what it's called. But yeah, so I plan on doing that on Monday, depending on what the stock does. I already have it queued actually, and you can see I have 2 at 8 cents. That's where it's going to be. It always costs an extra penny or two to buy an option and roll an option. So I'm going to do that. I don't know if I could do it with Key Bank, which was another one, Key Corp, which is another one there. I had it listed as a penny. Let's look here. I think I looked at it, and I think it's 11.71. I don't think I wanted to sell the 12. Let's look here. Yeah, the 12.50 is right now doesn't pay anything, so there's no point in doing that. I'd have to roll it to. I might do that. I might roll it to the next week at the 12.50 and collect that $18 per position. I have 2 positions here, and so it'll be around probably. It's all said and done around $35. So I might do that on Monday. We'll see where the market's at and what's going on. Nokia's expiring Friday. I have it at the $5. I might roll this one as well. I'm not really sure how much I really want to hold Nokia, so I'm kind of on the fence on this stock right now. So you can see I have the $5. I might roll it to the 17th and collect the 450 price of $12, and that way, if I lose it, I lose it. If it goes, or I can always roll it over to the next week, depending on where we're at. So I might do that with the key. It's just another way to collect more premium. And for me, collecting more premium means buying more stocks, because that's what I do with the money right now. I just roll it into more positions and more stocks. And so AG&C is another one expiring on Friday. It's got a 4 cents per share value right now. It's at 12.72. I have a 13.50. It's probably a little too close to the strike price. I might roll it out let's see here what we're looking at here. Um, so we're looking at real quick if it comes up. Let's see here, we're at $12.72 strike price, so $13. It's worth $13. It's worth 13 cents, which is $13 for a full position. I might roll it to the, yeah, see the 13. There's no point in rolling the 13.50 over. I might roll it, buy it back, and roll it to that $13 strike price on the 17th, and just collect more premium. You know, and again, when I collect premium, it means I'm buying more shares and creating more positions. And so, and the rest of those UPRO, I'm looking to roll that back actually and try to get that, lower the date on it and get it closer to the 10th and the 17th. I want to get out of that because I can't sell any premiums on UPRO because it's behind. I was able to bump it up from like a $39, $38 strike price to $42.50 over the last month. So I did gain, you know, $450 worth of value roughly on UPRO. But I lost all the premium, and the premium is actually worth more to me than the strike price going up would be. So it's kind of a catch-22. So what I'm probably going to try to do is roll that out, and I thought I could do it for a $42 strike price, and maybe on the 17th, or was it the 10th, and I could just sell puts on it or buy different stocks. And AIG, I'm still behind. It's got $8.21. $28 strike price, and AIG's been dropping, so it's just too far out of the date's just too far out right now for me to roll it again, and so I might try to see what I can do with that. I can just try to get creative and find different ways to either get out of my option or increase my my premiums. So real quick here is when I'm holding still: Dow Chemical, one share here, and one position here in Robinhood. Alteria Group, one position. MetLife, one position. Pfizer, two. Main Street Capital, one position. AIG, one position. AT&T, two positions. BP, I want to pick up some more BP. I might actually sell some stock to roll into BP. So some of these cheaper stocks I own. Maybe some ET because I have way too much of it. Viacom, I have two positions. EPD, two positions. HPQ, one position. AG&C, one position. KeyBank, two positions. PAA, we're going to go over these real fast here so you know what they are. Plains All American, I have two positions. It's another pipeline company. It pays a really healthy dividend. It's a highly rated stock. Well rated, I should say. I believe it pays around 11%. I don't believe Robinhood's numbers. ET, again, I have too much of this. And it's all these pipeline stocks have really, and the energy stocks have really dropped in the last 3 weeks. Nokia, I have one position. We talked about that. My average price is $4.39. UPRO, I have one position, and it's covered. And it is at $46.14 currently. First Horizon National, I have 21 shares. I have a bunch queued there, 12 shares queued. I'm going to buy some more on Monday. This is an insurance stock. It pays roughly a 6% dividend. It's highly rated, as you can see there. It is a monthly covered call stock. What happens with these? I usually sell them mid-month, so halfway through the option period. Euronav, so weekly, and this is an energy holding company. It like stores crude oil and things like that. A lot of energy. That happens when you're chasing dividend stocks. Very highly rated, as you can see. You know, I have too much energy, obviously, and I'm trying to get out of some of my energy to some other. The good news is energy's down right now. It's been down for the last 3 weeks. Hopefully we get a bounce back here this month. Kinder Morgan, another energy stock. I don't have a full position here. I just have one share, and I have a position in my Charles Schwab account though. It's been highly rated. I sent a buyout like 4 different Experts on CNBC said to put a buy on Kinder Morgan. Olin's a chemical company. I owned this in the past. I think I rolled out of it to sell puts on TNA, which I'm still doing actually. And then my last one I own, I just have queued in a share of this. This is a financial stock. It is a monthly option stock, and actually it is let's see here, it pays about a 5% dividend, 5.5, almost 6. And I'm looking to get a position on this, and this again I think is a monthly. Let's look at it. Yeah, so next one's July 17th. It's a monthly. Give you an idea what an $11 strike price pays. It'd be $30. You know, I'm a ways away from full position on this, so I probably won't be able to collect that anytime soon. Yeah, that's real quick. That's what I. So you can see I'm building positions on these bottom ones. It's kind of where I put my building position stocks at, is at the bottom. So I put my ETFs a little bit above that when they have positions. I'm down to just one ETF, and the reason why is I'm selling covered calls on TNA, and not covered calls. I'm selling puts on TNA, and collecting that weekly. Hopefully out of the money and the strike price not being met. But if it is met, I will just buy the TNA and probably just sell if I could roll it over without it being met, I will do that. So basically, if I could roll it over and still collect a good premium, collect that $1 per share premium or close, I would roll it over. If I can't, I would just let the stock be assigned to me, and then it's called the wheel method, and then you sell the covered call on the stock. But the problem with, you really want to try to stay away from it if possible. If you can roll it over, roll it over. You don't want to own the stock unless you really, there's a big dollar difference, so you can't really roll it over. And the reason why is because a lot of times for you to do the wheel method, your strike price might not be, might be too far out of the money for you to be able to, you don't want to lose money basically. And say if I end up buying it for a put at $24, and then the stock rolls up to, and I have to sell it for, 23, if I have to sell an option at 23, I would lose $100 on that, on the wheel method. So I'm really trying not to get assigned or try to lose my stocks. I'd rather just roll them over if possible, and that way there's less risk, I feel. And so this gives you an idea where I'm at. And again, this has kind of been a struggle. I went from 40 to 50 super fast, I think is off the bounce. And I've been struggling right around the mid-50 range for the last 2 or 3 weeks, even adding money. And I've been adding money as well as collecting premiums and dividends. All right, guys, thank you for watching. All right, if you're watching this and the screen's really small, remember you can hit the full screen. And eventually I'm going to put a link there to my Robinhood account. If you join Robinhood, you'll get a free stock, as well as I will get a free stock, and I can open it up on the air and you can see that, and we'll go from there. All right, guys, thanks for watching.